Good morning and welcome to another full transparency trading session where I am your host Sebastian, and today we're going to do your morning breakdown. But first we're going to look at the market. Let's go to the 5-minute time frame real quick. And as you can see, we've been consolidating heavily since the market closed yesterday. I mean, we have not moved a single centimeter. So I'd be looking to pull it down to about right here if we pull back, which isn't far. It's about $20. But if you look at SPY, we are up above 555, right? We popped up above it last night. We've risen above it in the after hours. So pre-market, we're far above 555. So you got to kind of start looking to see where SPY might go. Let's go to the 4-hour time frame, refresh, and enlarge. Plus sign to enlarge. All right, so as we're looking at SPY and we look back in time, this was an area of resistance. We're going above it. We're looking for this next checkpoint right here and this next candle right there. So 556. Let's put a little right click, put a little indicator there, add alert. So 556 and some change, 556.80. Following that, you're looking at 557.60. And then above that, this level right here is a key level and very important. You'll see that it meets not only the top of this body of this candle, but the top of this wick over here. And that is 559.63. Let's just go 560, right? 560 would take us back up to this gap here that was created when we started the push down, and will put us firmly in a $5 range. But what we could do today more likely is push back down to the gap at 549, but that's only if we come below this area right here, 554.37. This has been a support for a very long time. As you can see, we closed that support. We are now holding firmly above support. So since we're holding firmly above support, I'm looking for the trend to continue. And we're just going to take a quick look at something called the fear and greed meter. So we're going to go to the fear and greed meter, and on yesterday, this thing was in the fear area. It was over here in this little orange box, right? Now we've shifted to neutral. The CPI data, inflation data came in pretty decent. And we'll head over to BLS really quickly, bls.gov. And this is the Bureau of Labor Statistics. And this is where you can come and find all of your information. So you can just go to your data tools, look at the U.S. economy in a glance, and they're going to show you the unemployment rates, the change in payroll employment, and hourly average earnings. You're going to see the consumer price index. That's what CPI stands for. You're going to see the PPI, the producer price index, and all of those numbers, how they change, how they've been affected. June, you can see we were down at -1. We're up to 2 in July and August. We were at 4 in March, which is poor. We were at 3 in April. So the inflation is coming down slightly as time goes on. But back to the chart, guys. Let's see what we're going to be doing for this week. Let's head on over to MES because I don't want to mess up my chart. And on MES, you can see that it's very similar to what happened in SPY. They're the exact same thing. This is just the version of it that makes SPY. Futures run all day and all night. SPY only runs from 9:30 until 4 p.m. So we're going to shrink this down a bit so that we can see more of the chart and see where we're going from. And as you can see where we came from down here, if you mark this out, beautiful. Just put a little line right there, right? And then go to the left and you'll start to see us touch that area. As you can see, it was supported right here. We wicked it out a couple of times, but it's been support for a while now. This wick down here, if you put a line at that wick and go back to where we came from by clicking on this double right arrow right here, you can see that this is what we wicked through. So we came down to that support, we wicked it out, got a little reaction from that wick out, and we pushed all the way back up. On Wednesday, we had the 8:30 candle. We popped down really aggressively, right? And then the rest of the day until 10 o'clock, we pushed down, and then we went all the way back out. And what happens is they pull it down to allow the money that's sitting on the sideline in the market to get back into the market. So now what I'm looking for is just to come down, not to the 4-hour 200 EMA. Let's check out the 1 hours. The 1 hour is even lower. Just, man, let's check the 15s. Where is the 15s? It's not loading. Okay, so that is a $50 pull down. That is unlikely with how the market is sitting right now, but I'll put an alert there anyway. But let's look at the 5. The 5 minutes is what I'm looking to come down to. This 55, 57, $20 move. All that is $2 on SPY, so that'll put us back in that 553 range. If we come down, if anything, because we've consolidated so long, I'm looking for a very, very aggressive move to the upside when this market finally goes live. Back to the 4-hour time frame so I can help you guys draw out your charts. So here we are in the 4-hour time frame. We have a roof. The roof is the highest point that we've been to this year. Now we need to get our ceiling. So our ceiling is going to be right here. First, I want you to place a right line. And notice that I put it above the candle body and not the wick itself. The wick is a manipulation. It could be like a target level of liquidity grab. So we're just going to put our alert on the body of the candle. And we're going to zoom in on just this area because just this area is what's important to us. This is the past month. Okay, as we zoom in, come down here. Now you take your trend line and just layer your trend line over the top of this here. Now, what you can do also is if you want confirmation, go back to your left, go back into the history, stay on the alert line, but go back through the history and notice this was resistance right here, right? It was resistance, well, it was support here. It became resistance when we fell below it, and then we stayed below it. We came back up to it. We wicked it out a couple of times, but we keep coming back up to it, and it continually stays a level of resistance. There is a $5 window to the roof, so I will put an alert right there as the top, but the line is the true point. Yes, we come up to this line right here a couple of times, so I now know that there's an extra $5 or so that I can go. So if I get up to that $5 point, I'll be looking for a large reaction to the downside, and now we're climbing back up. So let's find our support level, or our first level of demand, which is now our current level of supply. So we put our alert line right there below the bodies of those candles. Why? Because it touches here, it touches there, and it touches several times right here, and then you have the volume imbalance right there. So on this point, same deal, take your trend line, click on the white line and just drag it all the way across the white line to the current week, and then that'll give you a beautiful level of resistance, which we are clearly heading towards fairly quickly. Then I want you to just stretch these out to the end of the month. Take them all the way across to the end of the month so that you don't have to do this again. I do this once a month where I'm just double checking what's going on. Go back over to my roof, click a right click. I want to make sure that I leave my alert line on there. Add alert line, create. And this is how I make sure that my lines stay even all the way through. If they're not on that line, then they are off. And as you can see, we're off a bit. Let's go ahead and move on up to the alert line. That's why I leave the white lines on the screen. It's not just because I want them to trigger when we get there, but I also leave them to help me draw my trend lines. So now, what is the next level that we're looking at? Well, the next level we're looking at is this white line right here. As you can see, we kind of come down a wick to it there. We touch here, we touch here, we touch there. Very important area right there. The reason that I won't do these wicks is, again, they are liquidity grabs. We want the consolidation areas. The bottom of the consolidation areas and the top of the consolidation areas is how we draw our zones out. So right now, what is this? This is our support. So let's see if we can find the text bubble. If we can't find the text bubble, just type your own text bubble in. Click right there, add text. Let's make the font 16. And then you're gonna type in right there, support. It used to be resistance, it is now support. Click on the screen and you can drag that on up above the line. We'll make it a little bigger, it's a little hard to see. Make it a 20, support. Now on the next line up, which we're gonna click right here, should just click the plus sign. You're gonna type in resist, and that stands for your resistance. Click on the screen, drag it above the blue line. So now you have your support and resistance for the day. Now we're gonna be looking at a demand zone. So let's go to the left further. You see this white line right here? This is a perfect demand zone. Why? Because we hit here, we hit here, we hit here, we hit several times there, and then we take it on across. So we're gonna make that our demand zone. So of course, take another trend line, run it straight through that candle there, just go along the white line, and then that'll actually put us back at the 4-hour 200 EMA. So if we come back down the 4-hour 200 EMA, there's going to be a very aggressive move to the upside, but more than likely it's unlikely that we do get back down here. But we're going to draw it out anyway because we want to have all of our tools in place. And just type in demand zone 1 because there's multiple. So this is our first demand zone of the time frame. Next up, so we have a wider range, right? So we're gonna have to cut this range in half because the least likely thing is that we're gonna get above this line instantly and instantly go all the way back up. So we're gonna cut this range in half. We're just gonna place a white line right here, add alert, and the candle breaks is how I'm choosing this particular cut and half point, right? Notice we touch here, we touch here, we touch several times here, we touch all throughout, which is confirming that this is a nice level of resistance or support. So this will be our current supply zone. All right, so take your trend line, put it on the line there, should run it straight across, and then you're gonna go ahead and you're gonna add text. But first we're gonna stretch this out, make sure that we stretch it out as long as we did the others, giving us the rest of the month. Now go to your text bubble and just add your text. And you just put CUR, RS, or supply. And that makes your current supply zone. So current supply zone, take the text, place it right here. So that's the area that we're reaching for today. All right. Now, this is going to be your ceiling. You have the roof, which is above the ceiling. You're going to add a text bubble right here. Make this a ceiling. Why is that the ceiling? It's the highest point we've been able to reach for quite some time now. And we've been struggling to break through that. So we've been struggling to break through this point since August. Since the fall down, we haven't revisited it. You can really say since July 24th, or even back to July 17th, was the last time that we touched that and could get above it, could get to it. So since then, we've been hitting it and rejecting. We're looking to head back up there again. That's maybe something that happens in October, November. Who knows? Who knows when that's actually going to happen? But if the market continues in the direction that it's going right now, we'll have the opportunity. We will have the opportunity. So now we're going to go to a lower demand zone in case we flush out. If things do go deeply negative, go ahead and add your alert here. And of course, it's going to be the same across the paths right there. Boom, we get hits here, we get hits there. So since we get hits here and there, I'm going to move it down ever so slightly to just below the wick here to make it even with the other areas. I want it as accurate as possible. So since it's a pullback, we move below the wick, we move it to the volume imbalance. We take our blue line as always, layer it on the white line, and just drag it across really quickly. Add the text bubble. Lower. Demand zone. Okay, slide. Undo that. Uh-oh, bring it back, bring it back. And place a lower demand zone there. So that is our first level that we would go down to if we do break through the 555. The following level right here on the 4-hour time frame, go ahead and draw out your indicator, and we're just going to do this literally. We do it for all the areas where you see hangups and all the areas where you see strong consolidation. And when you want confirmation, just move your screen to the left, drag it all the way through, and you start to see the confirmation go all the way across. Add a white line here because this is a nice little area of support. Don't need to draw a blue line there. Head all the way over to the right. And now we're going to layer a line right here. I'm going to shrink my screen down just a little bit so I can bring all these together. We're going to layer on the line right here. This is the true level here. So that's what I'm taking. Remember the body of the candle, not the wicks for me. So there, go ahead and add our alert line so that we can stay on course. We'll take that all the way across the alert line to this point right here, which is beautiful. Come on, wiggly hands, right there. There we go. So now we're on there, several touches, several touches. This is the lowest level that we're going to currently. And we will make this the floor. So add your text bubble, click it right there. FLOR. We got our floor now. So now we have our floor. We have D3 right here. DM3, your third demand zone. The first level that you'd go to if you broke through the floor here, past demand zone number 2. Put a 2 at the end of this. So now you've got your ceiling. You've got your current supply zone, you have your resistance, you have your support of the current day. Resistance and support for me is always going to be the current day. Once we break down, we'll hit demand zone number 1, putting us at towards a 4-hour 200 EMA. We break down below that, we'll hit demand zone number 2. We break down below that, we'll hit demand zone number 3. We break down below that, we hit the floor, and then we will react aggressively off of the floor. very aggressively, I might add. As you can see, we hit the floor yesterday and we shot up like a bottle rocket for the rest of the day. But right now we're sitting at this high. We're above the resistance level right here, so that's why I didn't mark this out. And we are moving on to the next level of resistance, which is right here at the bodies of the candles. But I will put a reminder there, so add the alert as well, in case we do come back down to the lower resistance level. Now, as we go through our 1 hour time frame, you'll see that all of these lines line up perfectly on the 1 hour time frame as levels that we can take trades. Look at that. Level we can take trade right there, level we can take trade here, level we can take trade here. Notice how all of my areas touch and then go from there. They touch, they go from there, they touch. We're sitting above it right now. Excellent. That's how you know you have an excellent zone. Go down on the 15 minutes, zoom in on that by clicking the plus sign, and you're gonna see the exact same thing. Touch the white line, touch the white line, touch the blue line, never come back. Touch the blue line, resist a little bit, get above the blue line, never come back. Touch the blue line, resist a little bit, get above the blue line, and never come back. We do the same thing over and over and over again, and now we're reaching for the next level of resistance, which is up there. I only need the words on the 4 hour time frame. I can take the trades off of any time frame using this 5 minute time frame. No different. All of these time frames are going to be exactly the same. The lines are just going to get a little bit more spaced apart, and sometimes you'll run through them, which will give you even better opportunities as you go to the lower time frames to take great trades. Refresh the 1 minute, go ahead and click plus, and as you can see on the 1 minute, you have far less lines, and that is why you know that, first off, this is about a $10 range. So in your $10 range, your overall range is 81 going down to 57. So now on the 5 minute and 15 minutes, you can start plotting out smaller ranges in between. And what these smaller ranges will do is they'll go ahead and cut in between those, but when you go to the 4 hour, they will be like little tiny lines. So on our 15 minute time frame, we'll draw out the overall daily ranges. So right here, this current range of the day, take over the white line, puts you at the 200 EMA. That's the area that you're looking to go down to. Stretch it to the right so that you get the entire day. And then boom, you'll have these smaller zones to work with as well. Another level of support, put right here over these, because you kept hitting this area before you finally broke through. Then we'll just put our white line right here, and then layer ourselves over the white line. Now this is how I set up for my day as my day is going along. I put lower levels in there, and then it gives me everything that I need. So now I got levels here, levels there. I've got my current day's supply zone, which is right here. My current day's support, which is going to be reached by the 4 hours, so I won't have to change that at all. The 4 hours right here. But we will go ahead and place a blue line right here, cutting off where we could fall down to first. You want to know all these things if you're trading off of the 1 minute. You want to have all of these supports. So level 1 support, LVL 1 SUP. Level 1 support. Add another text box. LVL 1 DM. Level 1 demand zone. Whatever, we'll just leave it layered. LVL2 DM, that's your level 2 demand zone. And level 3, which is going to be your main demand zone for right now. So text, LVL3, MAIN, D. And now once we reach that 200 EMA on the 15 minute, if we go below that, now we're pushing back into the old zone. Now we're pushing back into the past level of being below 554. So if we get below 554, then you go over to the 1 hour and you look at the 1 hour time frame and see how far down you could possibly go. Go to the 1 hour time frame, you're talking about 55.34. So you're talking about a $40 fall if we end up going down to the 1 hour 200 EMA. But right now we'll stick to the hourly. The 1 hour puts you right there on the third demand zone. Go to the 15 minute, go down to the 5 minute, and as you start to see, now you got your levels in place that'll help you take your trade. So level 1 support is the first level where I take my trade. Level 1 demand, second level where I take my trade. That's my favorite level to take the trade would be level 1 demand zone. These are below the demand zone. Put a little line there just as a point of interest. And if you come down to the white line, that's a 100% take your trade. All right, you break down to this point right here, you come down to this line, that is another take your trade. Now for my 1 minute screen, I will create on this line that I just created, since this was resistance and is now support, I'll put this line here, which breaks up my current demand zone 1 and my current demand zone 2. And then we'll just type in the words add text, strong support. And of course, you don't have to do all this. This is just how I set up my chart, so that as I'm trading on a 1 minute time frame, I can either use all 3 screens. Go ahead and click save. I can use all 3 screens like this, or I can just use the 1 screen and have all of the levels on the 1 screen, because all this is the 5 minute, all this is the 15 minute, and I can have all my levels on 1 screen on the 1 minute time frame. And then I can use just a single screen. So boom, we push down here. This is the first level that I'm looking to take a massive trade off of. The 200 EMA, just put an alert there. Automatically, I would take trades to the upside off of the 200 EMA. That's why I don't mark it out. Yeah, as we reach these zones, if we do fall down to these areas, I'm looking for big time trades to the upside. Right now, we are in a consolidation period, and we're in a massive consolidation. We have been consolidating all night long since the open of the market. 1800 the market opened, shot up a little bit, and we just started consolidating. We literally went a $2 consolidation range for the first 2 hours, finally breaking out, pulling back down, and then just consolidating towards the upside, going up some more, pulling back down, consolidating and going up to the same height before, pulling down again, and then started consolidating, now heading back up to that same height that we were at before. So this is the level right here that's acting as a current roof. So we'll go ahead and put an alert there. If we cross that current roof, we're looking to head up to our first level of resistance, which is a full almost $10 higher. It's about $7 higher. But that's it for you guys for your morning breakdown. You guys have a great day. Happy hunting out there. Listen, take smart trades, take the easy money. You know, don't let them get you. Just be patient, wait for your trade to come to you, and then take it like I say, I have my levels here, so I only take my trade when I hit the levels. I don't ditto in the middle. I don't play with any of this middle stuff where it's going up and down. One, because it gives you way too much room for error, way too much drawdown. If I want the maximum loss to be $3, I'm gonna have a pretty tight situation. And if you look at that $3 window, if you get into the middle, you're gonna touch your stop loss before you ever get down here. So that's why I don't get in the middle. I only take trades when I hit my lines. But these are absolutely friggin' perfect levels. I'm gonna screenshot these, and I'm just gonna layer them over my other chart. But you guys have a great day. Be safe out there. This is your boy Sebastian, and I'm out.